Tammy Burkhart, and I am going to talk about the first chapter in Managerial Accounting. The chapter is actually called, I think, Welcome to Managerial Accounting, but I like to call it the Cost of Goods Manufactured chapter. It goes through lots of different definitions of costs, some of which we'll recognize from financial accounting, and some are new. So I wanted to start with what the different costs are, and I like to break them down into product costs and period costs. So product costs are those costs that actually go into making a product. So when we talk about a cost of goods manufactured schedule, we're talking about a type of company that makes a good. So I do understand that service companies don't, this wouldn't apply to them, and that's okay. For the purposes of the first couple chapters in managerial accounting, we're only going to deal with types of companies that create their own goods. So whether they're making a piece of furniture like a table, or they're making a guitar, or they're making a vacuum, or clothing, whatever that might be, the types of companies that we're going to be talking about in these first few chapters in managerial accounting are types of companies that make a good. So that being said, we need to figure out what product costs are. So product costs, by the way, are the only costs that actually go on a cost of goods manufactured schedule. What are those? Well, think about what would go into making a table. You would need what's called direct materials. What would direct materials be? Direct materials for a wood table would be, quite obviously, the wood, maybe some screws to go into the wood to screw it together, and let's just say for the sake of argument that the table had iron legs, then it would be the 4 iron legs to go on the table. So all of those things are what we call direct materials. Why direct? Because they go directly into making the good. So I'm going to write direct materials here. And most of the time you need some sort of hands-on workers to put the table together, or the guitar or the vacuum, whatever. I know a lot of things are automated right now, but just go with me we're still allowing people to make goods. So we are also going to need what's called direct labor. Now, direct labor are the people that actually lay their hands on making the product. So it would be the person that's putting together the table or the guitar. It would not be, let's say, the factory supervisor, the CFO, the person in charge of manufacturing. It wouldn't be those people. They do obviously serve a role. Their costs will be mentioned, but they're not direct labor. Direct labor is whomever puts their physical hands to make the product, whether they're switching something on and off on a computerized system, or they're actually physically putting together a table. That's what direct labor is. So that's 2 of the 3. So that's the first 2. Those are kind of the easy 2. The one product cost that's going to give us the most grief this entire semester is coming next. It's called factory overhead. It's also called manufacturing overhead, and you'll hear me go back and forth between those 2. They mean the same thing. Overhead, whether it's factory manufacturing overhead, they mean the same thing. So different textbooks, different companies use those words interchangeably, factory overhead and manufacturing overhead. Overhead is everything else associated with making the product. So things like rent, utilities, the factory supervisor I mentioned earlier, the window washer for the factory, the person that does the landscaping outside of the factory, everything else that goes into keeping that factory running is a fact that's not direct material, direct labor, is factory overhead. So you can kind of think the factory overhead is kind of a catch-all, but it's everything that goes into making the product that's not direct materials and direct labor. So when you combine the 3 of these and you think of like a standalone manufacturing facility, the product costs are all the costs associated with running that facility. Now, it has nothing to do with sales or marketing or distribution or any of that. It simply has to do with, we're thinking a standalone building, creating that table or creating that guitar or whatever it is we're talking about, okay? Those are product costs. So think in your mind that those 3 things are product costs and they go into making the actual product. Now, period costs are some of those things I just mentioned. Period costs I like to think of them as more income statement costs. Those are things like advertising, marketing, distribution, so sales and distribution. But it also includes administrative costs. So if we're talking about a big company, they might have a whole nother office, right, separate from the manufacturing facility. And so those would be administrative costs. So assuming that the sales team and the administrators are housed somewhere else, they would be the rent and the utilities and all of that house all of these type of individuals or expenses. Those would all be period costs, okay? So period costs are costs associated with running a company, but they're not one of the three product costs with physically making the company, making the good, excuse me. So that's kind of the difference between period costs. And period costs, a long list of period costs. So I just mentioned kind of the top ones. That's kind of the difference between a product and a period cost. Moving on, I wanted to talk about a problem. You for homework have to do, or are required to do, 3 of the A problems. Just logging into my computer, sorry about that. So I wanted to do for you guys have to do problem 15-5A. I actually wanted to kind of run through the format for that. So sometimes I'll do a B problem for you, or sometimes I'll help you out with your own A problem, and that's what I'm going to do for this first chapter. So rather than doing a problem that's similar to yours, I'm actually going to give you the layout, not the numbers, so I'm not going to give you the solutions, but I'm going to kind of give you the layout so you know how to put together a cost of goods manufactured schedule. Now this is obviously also in the reading, but I just wanted to go through it and kind of explain things as I go. So you guys have to do a problem for, I think it is Robstown Corporation. So we'll start with that. And you're creating a statement of cost of goods manufactured. I'm abbreviating. And then this is going to be for the year. So for the year ended December 31st, 2008. So we'll write that. So that's going to be our heading. So very similar to an income statement or balance sheet that we've done in the past. We're going to start with the name of the corporation, the name of the statement, I abbreviate it, and then a period of time. So in this case, it's a period of time like the income statement, not a point in time like a balance sheet. So for the year ended December 31st, 2008, the very first line is going to be work in process inventory from the previous year. So work in process inventory dated January 1st, 2008. So what is work in process? We haven't talked about that. We can talk about it over here. Work in process inventory is just that. It's goods that are in process but not complete. So if we're thinking about making a guitar, maybe it has the wooden case of a guitar, maybe where the strings go on it and some of the strings, but maybe not the keys that you turn the top, or finishing touches. So it's in process. The raw materials have already, or the direct materials have already been purchased. Labor has gone into it. Quite obviously some factory overhead in terms of maybe a supervisor salary, the rent to put it together. All that has happened for the work in process. It's just not complete yet. So when we start our financial statement for cost of goods manufactured, we always want to start with what was left over from the previous period. So obviously, this work in process was work in process December 31st, 2007, and then the very next day, it's going to be the same amount. Okay, so I'm not going to put the dollar amounts in because I want you to work on that, but I am going to give you the very first first line. You always start with that, with the cost of goods manufactured statement. The next line is actually going to be a heading. It's going to be called direct materials. And we're going to put a colon because there's actually several lines that follow. We're going to start with beginning materials. So these are the materials that you have as of January 1st. Again, so these are the direct materials that haven't been touched yet. So once you move those out of like the raw materials warehouse, all of your, strings for the guitar or, wood pieces that haven't been put together, all of those are called materials, kind of a raw material. They're your direct materials, but they haven't been touched yet. They haven't been altered. And so we would start with the beginning materials. Once again, this was going to be left over from the previous period, 2000Y7. That's going to be our first. Then we're going to add all of the purchases that we've had this period, this year. Add whatever the purchase number is that will be given. And that's going to give you, so you add this plus this, that is going to give you cost of materials available. Okay, that's going to give you cost of materials available for use. Okay, so we're going to take this number plus this number, and we're going to equal this number. Now we're going to subtract ending materials. Okay, what we have left over untouched at the end of the period, the end of the year in this case, and that's then going to equal the cost of materials used this period. Okay, so that's kind of makes sense, right? We start with our beginning materials, what we had left over from last period. We're adding in all of the purchases, everything that we purchased in the year 2000Y8. That's going to get the materials available to be altered, available to be changed into our good. We're going to subtract the ending materials, so that would be like December 31st, 2000Y8. And that's going to give us cost of materials used. Moving on, that's for materials. Our next line is going to be for direct labor. Direct labor is next, and direct labor is simply one line. So we'll put that down, direct labor. And whatever the amount is given in the problem, that's the amount of direct labor that you put here for direct labor. And then our next category is going to be factory overhead. Okay, factory overhead. Now, factory overhead, similar to the direct materials, is a heading, okay? And so then you're going to list all of your factory overhead. Now, in this case, you have several. In fact, let me give you how many. You've got, let's see, 1, 2, 3, 4, 5, 6, 7. You have 7 items. I'm going to list them for you. You have indirect labor. Okay, that's the first. You have depreciation for factory equipment. You have heat, light, and power for the factory. You have property taxes and rent expense. For the factory. And last, you have miscellaneous. Now, you have to remember that all of these items are all going to be for the factory. Because you could have depreciation on equipment for your administrative offices. You could have rent and property taxes for your administrative offices. Those would be period costs. They would go on the income statement. So you have to make sure that the labels are proper. So all of these are going to be indirect labor for the factory, depreciation for the equipment on the factory, and so forth. Okay? Once you're done with the factory, I want to make sure that I got everything. Rent. Oh, I forgot one. Supplies. Supplies for the factory. Sorry about that. I told you there were 7 and I only gave you 6, so there's supplies. Then you're going to have, obviously, a total manufacturing overhead line. Okay, so I'll let you put that down there. And then over here, we've got 3 more lines. Total manufacturing costs. We've got total manufacturing costs incurred in 2000 Y8. So this would be, let me just erase this really quick. This would be in 2000 Y8, improvising here. So the next line would be total manufacturing costs. Now I know this kind of sounds like we're saying the same thing. It's not. This total manufacturing costs in 2000 Y8, this is going to be the total of this number here, total used, cost of materials used, total direct labor, okay, so that 1, 2, and then once you total this, I ran out of room, so the total factory overhead, okay, those 3 numbers are going to be what this is. Then, for total manufacturing costs, you add in this work in process inventory, okay? So it's basically whatever this is plus this very first line. And then we're going to subtract ending work in process inventory. So this would be December 31st, 2000 Y8. And that's then going to equal what it is we're doing, cost of goods manufactured. So I kind of ran out of board, but I think I got it all. So then we're going to end with cost of goods manufactured. So at the end of that, that's basically kind of a summary of the chapter. So there are obviously other things in the chapter. They go on and talk about the income statement. I think that's part of the problem, but you should know how to do an income statement at this point. You know, revenue minus expense, all of that. You do have the cost of goods sold to put in, but the book talks about that. But I did want to go over and just talk a little bit about what product costs and period costs were. I wanted to talk about the format of the statement of cost of goods manufactured and just talk a little bit about what it is that this chapter is kind of summarizing. So if you have any questions, send me an email. Otherwise, I'll see you later.